Good news on the inflation front as well. August WPI has come in at 4.53% as against expectations of a higher figure, and also the recorded one in July, which is 5.09%. This is very much within the RBI's target.
Absolutely, if you just look at the WPI number, it's just coming in, as you mentioned about the CPI as well, which had given a hint about, this being easing on a month-on-month basis. A lot of products are, same within the basket. Of course, this has slightly more products, and that's more towards the consumer side. And that's the reason, why this number comes in 4.43% versus 4.26 in July. That's essentially, the sense that you're getting about the WPI number. We'll try and get some perspective on this, but as of now the markets had got a hint about this because CPI came in. CPI gives you a trend, and the similar trend comes in with WPI. It's very rare that you get a WPI moving in completely opposite direction versus a CPI, so that's why that indication was already there with the market. Let's just look at what's happening to the currency, what's happening to the yield. I think there would be any marginal movement because of this. Poonam is just miking up. She's just sitting right besides me, so she'll give us some more color about this. The manufacturing index inflation is coming at 4.4, which is a decent number considering that manufacturing activity is probably picking up. Fuel and power, 17% move expected with the sort of move that has come in. Okay, Poonam is now with us. Poonam, firstly, WPI exactly in line with CPI. That's why it's not a big surprise to the street.
Well, Pankaj, if you look at the CPI trend, the headline CPI number, yes, did come off sharply on account of fairly easing food inflation. We did see some amount of respite even in terms of the core CPI. On the WPI front, it is fairly in line with the consensus estimates. It's even if you look in terms of the overall manufactured inflation as well as the primary articles inflation, yes, there was expectation on the primary articles inflation to come down. Of course, there on account of easing food inflation pressure, so fairly unexpected lines on that front. Fuel, of course, remains slightly a concern in terms of overall the macro dynamics that we are seeing playing out right now. Manufactured products inflation, some amount of rise, if I'm not mistaken, is seen in terms of the manufactured products inflation. Again, if you look at the manufactured products inflation, does bring it to the point that yes, maybe we are seeing some amount of pricing pressure there coming back, which is a fairly good sign. Having said that, with the kind of rampant INR depreciation, with the kind of high oil prices, and also the MSP hikes, that does leave a risk of higher inflationary expectations going ahead. And mind you, now RBI does look into CPI in order to decide the overall monetary policy trajectory, so that becomes fairly important. But yes, WPI as of now is fairly in line with estimates. Inch up in the manufactured products inflation is good. In terms of the PM Modi meet and the kind of measures that would be taken, will we see further rate hikes going ahead or not, and how soon will that be? I guess that's a key question that markets would be awaiting for.
Yes, and I guess maybe the midweek holiday was exactly what the bulls also needed. It's turning out to be a decent Friday after the manic Monday and the terrible Tuesday earlier this week. But something that the markets have been lapping up since Wednesday afternoon is the bit of news of Prime Minister Narendra Modi holding a crucial economic review meeting on Saturday. We understand that meeting is going to be at 4 p.m. Ever since the markets got to know that Narendra Modi is holding that economic recovery, you have seen a recovery in Mint Street, which has had its impact on the large street. Pankaj, we all know that it is Mint Street which has pretty much been dictating terms of the equity markets as well this entire week and last week as well. What we do understand is that while Modi is going to be reviewing the economy, can any intervention for stemming the rupee's fall also be discussed at that crucial meeting on Saturday? Till this Monday, what we had been picking up in the corridors of power in New Delhi had been that it's not the time to start panicking, that there is nothing that India can do. The fall of the rupee is all external in nature. That commentary began to change this week on Monday, with government sources indicating that North Block, that's a finance ministry, in conjunction with the Reserve Bank of India, is looking at soft measures to contain the stem of the rupee. For example, NRI deposits. That certainly seems to be on the agenda for the Finance Ministry. And this crucial meeting is also coming when crude is on the boil. Can we finally see some form of that package that Dharmendra Pradhan and the government and Amit Shah, for that matter, have been talking about for protecting consumers from petrol and diesel prices? You've also got consumer price inflation easing to a 10-month low. You've got the 10-year bond yields that are off their lows. But the expectation is that on Saturday, the main discussion point is indeed going to be to the twin deficit, the current account deficit, which has ballooned to a 5-year high, as well as measures to stem the rupee. These seems to be the main pressure points on the macros and the fisc at large. Let's take this conversation forward with our in-house expert and consulting editor, Mike Lee. Mike Lee, good afternoon. Always a pleasure talking to you. We've got that crucial meeting coming up on Saturday. The Prime Minister is going to be reviewing the economy. Can we finally see some measures to stem the rupee, if that is at all possible, also with soft measures and against the backdrop of the WPI coming in well within the RBI range, less than 5%?
Well, yes, clearly, as we can see on the WPI number that we've got today at 4.43, well below, in fact, the June number at 5.577 was a 4-year high. And now we have the WPI also falling along with the CPI. So clearly, I think this reiterates the position that many economists have taken. There is absolutely no need to panic. Our macro fundamentals are far better than they were in 2013, better than many of our emerging market peers. So what government should watch out for is not succumb to pressure from many brokerages and foreign banks, which do want India to launch some kind of a foreign bond, some kind of a special NRI deposit. Now, these are very expensive propositions, and there is absolutely no need at this particular juncture to do something. So government should tread very carefully and not panic, not get pressurized by a vocal middle class wanting stops on oil, because ultimately, remember, when oil prices rise internationally, somebody has to pick up the can. Somebody picks up the tab, and so it is very foolish to go back to the Congress policy of giving subsidies. If you want to consume oil, and the upper and the richer middle classes are the ones who consume on their petrol and transport, etc., you cannot subsidize, because ultimately subsidy burden is borne by everybody, including the rediwala. So it's important that government does not panic, just proceed slowly, plays it by the ear, and not do any kind of knee-jerk reaction. That really is my policy, prescription, Nayantara, and given the WPI, clearly we are
so Mike Lee. So, yes, Maitri, you're saying that we should not see a knee-jerk reaction from the government. What would your expectations be from the Reserve Bank? Next meeting on the 4th of October, given what's happening with the rupee, crude oil prices, and at a time when inflation is being contained and within its own targeted range, would you expect a rate hike?
Yeah, in fact, I would advocate a rate hike, particularly because the FOMC is going to meet before that on the 25th and 26th of this month, and is almost certainly going to raise the interest rates in the U.S. So I think the RBI's path is a little easier. A rate hike is very much on the cards and should be done, not so much as from inflation today, but going forward, inflation is going to pick up. We do need to see some kind of protection for the rupee, and a high interest rate will offer some kind of protection, because that is the classic defense of central banks whenever the currency is under pressure.
Right, Maithili ma'am, thank you so much for taking out time for us and telling us about what to expect in terms of rupee, what do you make of WPI, and all about the important meeting that is there over the weekend.